Bitcoin and the entire crypto market just dumped, sending shockwaves through portfolios, headlines, and social media feeds worldwide. But the real question is, why? Was it the fingerprints of whales manipulating the market once again? Was it a massive liquidation event cascading through the charts? Or did the drama unfold far from the blockchain, right in the corridors of political power at the White House? Today, we're breaking down the real reasons behind this sudden crash, what it means for Bitcoin, Ethereum, and altcoins, and, most importantly, what comes next for crypto investors and enthusiasts everywhere. Welcome back, everyone. If you're new here, this is the place where we cover the biggest crypto news, price action, and market predictions, so you can stay one step ahead of the crowd. Today was nothing short of a roller coaster. Bitcoin slipped to the $110,000 range, Ethereum crashed nearly 9%, and altcoins faced a truly brutal correction. Yet as the dust settles, a curious fact emerges. Nothing fundamental about crypto itself has changed. So, what on earth actually happened? Let's dive deep into the events that set off this chain reaction and examine what it means for the future. To understand today's chaos, we have to start at the very top, with breaking political news no one saw coming. President Donald Trump has fired Federal Reserve Governor Lisa Cook, citing allegations of mortgage fraud. This is a bombshell development, because the Federal Reserve is supposed to operate independently from the White House. Never before have we seen such a direct intervention, and the move has markets questioning whether the Fed's independence is now under threat. If Lisa Cook is indeed stepping down, it means that two Fed governors who previously opposed rate cuts are out of the picture. This opens the door for President Trump to nominate replacements who are more favorable to lowering interest rates, a prospect that could push rate cuts through much faster than previously expected. In theory, this could be bullish for risk assets like Bitcoin, since lower rates typically drive investors toward higher-yielding, riskier assets. But the manner in which this unfolded has deeply shaken investor confidence. It feels like political pressure is now hanging over the central bank, injecting a dose of uncertainty that always rattles financial markets. The result? A swift sell-off in U.S. long-term government debt, with 30-year Treasury yields shooting up to 4.92%, the highest yield gap we've seen in 3 years. The U.S. dollar weakened by 0.3% against a basket of peer currencies, underlining just how spooked investors have become. But as monumental as the political backdrop is, it was not the only factor at play. In the crypto market itself, whales made their presence felt in dramatic fashion. Reports confirm that a single whale dumped 24,000 BTC, worth more than $2.7 billion, into the market in a single move. While the initial shock was absorbed, the impact rippled quickly across the digital asset landscape. Ethereum, which had been on a strong upward trajectory, fell by about 9%. Solana, another favorite among altcoin investors, dropped 6 to 7%. The sell-off didn't stop there. Other altcoins followed suit, experiencing sharp declines in quick succession. But there's a twist to this tale that's as fascinating as it is unexpected. According to insider reports, this whale didn't simply cash out to dollars. Instead, the massive Bitcoin sale was used to buy Ethereum. At first glance, this seems counterintuitive. Why trigger a dump just to rotate into another crypto? But look closer, and you see the signs of a strategic play, not a panic sale. This isn't a top signal for the market. Rather, it's a rotation from the world's largest cryptocurrency to the second largest, possibly reflecting a strategic shift in how big players view the future of digital assets. Still, the sheer size of the dump had an immediate effect. It triggered a wave of fear, leading to forced liquidations and cascading panic among traders who were over-leveraged. According to data, over $550 million in leveraged positions were liquidated, most of it on the long side. Some analysts put the total closer to $750 million, maybe even approaching $1 billion once everything is tallied up. These liquidations forced more selling, sending prices even lower and compounding the pain across the market. Altcoins bore the brunt of this volatility. As panic selling set in, Bitcoin dominance climbed back up to nearly 59%. This is a classic move. When Bitcoin dips, altcoins tend to collapse even harder. It's a pattern seasoned traders know all too well, and today was a textbook example. Yet despite the bloodbath, something crucial hasn't changed. The fundamentals behind leading projects like Ethereum, Solana, and others remain strong. Institutional interest is still there. Corporate treasuries are continuing to buy, and ETFs are still pulling in billions in inflows. In fact, Ethereum just set a new all-time high of $4,953.73 on August 24, 2025, thanks to relentless ETF inflows and major corporate treasury allocations. The evidence suggests this is less about deteriorating fundamentals and more about whales using volatility to flush out over-leveraged traders and shake weak hands out of the market. So, what lies ahead? The next few days are set to be pivotal, with key macro events looming. NVIDIA's upcoming earnings report could have a significant impact, not just on the AI sector, but on tech stocks and risk assets more broadly. Then there's the PCE inflation report on Friday, a crucial data point for the Federal Reserve's policy decisions. If inflation looks tame, it will strengthen the case for sooner-than-expected rate cuts, which would be a tailwind for crypto and other risk assets. But if inflation comes in hotter than expected, markets could wobble again as investors reassess their expectations for Fed policy. These events are catalysts to watch very closely, as they have the potential to shape sentiment across all markets in the short term. But let's zoom out and consider the bigger picture. Days like this happen. Whales manipulate, weak hands panic, and leverage gets flushed out. It's a cycle as old as markets themselves, and it doesn't mean the end of the road for crypto. In fact, if you look past the noise, the long-term story remains incredibly compelling. Institutions like Pantera Capital, BitMine, and major Ethereum treasury companies are still pouring billions into the space. Tokenization is becoming a reality. Stablecoins are seeing explosive growth, and DeFi adoption continues to rise. The digital asset landscape is maturing, evolving, and expanding, even as volatility makes headlines. Ethereum, in particular, is showing remarkable resilience despite today's pullback. Analysts note a clear shift in institutional focus from Bitcoin to Ethereum, driven by Ethereum's central role in stablecoins, smart contracts, and the broader DeFi ecosystem. Some are even targeting a $10,000 price for ETH in the coming cycle, citing its unique value proposition and growing real-world utility. Meanwhile, Bitcoin's fundamentals remain unshaken. Network activity is strong, adoption is still climbing, and the narrative of Bitcoin as digital gold is only getting stronger as traditional markets face uncertainty. And let's not overlook the macro forces shaping the landscape. The Federal Reserve's next moves are now under a brighter spotlight than ever, thanks to the political drama unfolding in Washington. If Trump's new nominees fast-track rate cuts, it could turbocharge risk assets, including crypto. On the other hand, ongoing uncertainty about the Fed's independence could inject more volatility in the weeks ahead. Either way, the intersection of politics, macroeconomics, and digital assets is where the biggest opportunities and risks are likely to emerge. So what's the takeaway? Don't let fear shake you out of your positions. Volatility is the price of admission in crypto, and days like this are part of the game. The fundamentals haven't changed. The technology is advancing, adoption is growing, and institutional money is flowing in. If anything, this shakeout could set the stage for the next major move upward, as weak hands exit and stronger, more patient investors build their positions. If you found this breakdown helpful, make sure to hit that like button, subscribe for more updates, and join the conversation in the comments below. What do you think caused today's dump? Was it whale games, political drama, or just a healthy correction shaking out leverage? Let's talk about it. Stay strong, stay focused, and remember, crypto rewards those who can weather the storm. Thanks for tuning in, and I'll see you next time.